Okay, again in a very special market voice on the fundamental end, Jyoti Jaipurya, Head of Research at Bank of America Merrill Lynch Capital, joins us right now on the show. Jyoti, good to have you. Thanks so much for joining in. Neeraj here. Good morning. I was reading your post-budget report, Jyoti, wherein you did mention that the budget is going to be a bit of a non-event. And what a lot of people on the street, on the buy side, have been saying as well, that what the RBI does is probably going to be of more importance than what the FM has done. What do you believe the markets are likely to do over the next couple of months, considering the fact that the RBI is now starting to sound a lot more non-committal on rate action over a sustained period of time?
Yeah, I think, right from the beginning of the year, our view was markets this year would be positive only because of the RBI action, because our view was that we will see rate cuts from the RBI and that would help the market. For April, the thing now is the consensus generally expects a rate hike. So that's always a bit dangerous, that there are expectations already of a rate hike and hopefully we get that rate hike. If we don't get the rate hike, then it could be a bit of a dampener for the market. But otherwise, the general consensus is we'll get the rate hike, which helps, probably sustain these rallies or sustain market around the current levels. On the negative side, of course, inflation is probably starting to get a bit of worry, because there were excise duty and service tax increases in the budget, which will add to inflation. We increase our inflation view after the budget. Second is the rupee started to depreciate again, which again on the margin probably leads to increase in inflation. And third is, if we see global oil prices, they have remained sticky at higher levels. They're not really coming off. So there are inflationary pressures which have not really abated. RBI will have to do that balancing between inflation concerns and growth concerns. But we still think that over the course of this year, we'll see RBI cutting rates, which will be positive for markets.
Jyoti, you've always voiced a concern on crude oil prices, and for an economy like ours, a $10 per barrel hike, what would it mean for the equity markets? Would we see significant downside then in that case?
It's very interesting that if you take the correlation of Indian equity markets to crude oil prices, it's actually very positive, which means that markets do well when crude goes up and it's not the other way around. This works to a large extent because, what you have is a risk-on trade globally. Generally, crude goes up when there's a risk-on trade globally, and Indian equity market always participates in that risk-on trade. But this works up to a point. So you get a very sharp rally in crude, or crude goes beyond a point and markets start to roll off. So if we go back to 2008, Indian markets did very well, crude did very well, everything was moving up in tandem till crude crossed that $125, $130 level, and then the market started to get wobbly in India. People started getting very worried about India. So I would think another $10 hike in crude from these levels would start making markets very wary.
You think that's a possibility given the geopolitical risks? And if so, if indeed that does happen, Jyoti, what happens to, forget what happens to the markets, it's negative for sure. What happens to how people start viewing some of these oil and gas companies, particularly the OMCs?
I think, on the OMCs in general, our view has not been very positive. And I think, if you see most people in the market, they're not very positive on the OMC, especially, I would say the foreigners are not really interested in the OMCs because it's got very difficult to forecast profit of these companies. There's a lot of subsidy element which comes in, which, is very difficult to estimate or guesstimate. So it always becomes a matter of chance. So, the higher the oil price, obviously, the worse it is for these OMC companies, which of course has to be juxtaposed with the fact that if domestic prices can be increased of oil, then of course they are gaining. There are some people who bought the OMCs in the last couple of months in anticipation of a diesel price increase over the next few weeks. So that's something which is still somewhere on the card, though, I would have thought it would happen before the budget, which obviously after the elections has not happened. So we need to wait and watch whether the government finally hikes diesel prices and when they do it.
Jyoti, how would you approach the financial pact? Because increasingly one is seeing that the NPA overhang just doesn't cease to exist when it comes to a few banks.
Yeah, the financials are interesting because when rates get cut, the financials generally do well. But this time what we have on one side, which is the positive side, is that we are expecting rates to get cut by the RBI. On the negative side, we have one is NPLs, which are getting a concern. And they have been a concern for the last 6 months, but I don't think they're really going away. The second is, they had very high NIMs over the last 1 year, 18 months. And probably their NIMs have peaked now. So you probably are looking at lower margins in the financials over the next 6 to 9 months. So there are, positives which are weighed by the negatives. Our view is we have marginally overweight the financial pack. We think just the fact that you get RBI rate cut happening on the delta, that becomes like a big positive for banks. At the moment, we are sticking to the private sector banks rather than the public sector banks, where, probably the NPL pressure is much more.
Okay. Jyoti, purely from a bottom-up approach and not really a top-down approach, the broader end of the spectrum, is there anything that you guys like as a pocket? I mean, because a lot of people were talking about infrastructure and suddenly after a bit of an interest, it's died down as well. What do you do here, broader end? I mean, any of the spaces that you may have looked at closely and are bullish or bearish on from a 6 to 12 month perspective?
Yeah, I'd say from this year's perspective, in general, we have still very positive, the interest rate cyclical. So that's really where our focus has been. On infrastructure, we were bullish beginning of this year, but given where the current prices have led, just tactically, I would say, wait for things to come off a bit. Banks is the other area we've been positive on. The third area we've been positive on is some of the auto names. So not necessarily the two-wheelers which have done very well relatively over the last 1 year, but the four-wheeler companies are where we are positive on. Apart from that, of course, in the mid-cap space, we are positive a lot of the auto ancillary names.
Jyoti, how big a risk does the EU crisis still pose for our markets, or for that matter, global equities per se?
It is a risk. It's something which, will always remain in the backdrop. Generally what, I guess they've succeeded in doing is the immediate Greece crisis, which people were worried of for the last few weeks, is in some sense sorted. So that's, one overhang which is behind us. But yeah, for most people it is what we are succeeding in doing is keep postponing the problem and hoping at some point that things start to improve, growth starts to revive over there so that, the crisis blows off. So it's something which probably has got postponed, but it's not something which is totally off the table. It's something which can come to haunt us sooner than you expect, or maybe it won't haunt us for the rest of this year.
Hotel Leela is up 9% in trade incidentally. Remember, it was a big loser in Friday's session, and IVRCL is up 4.5% on all the news surrounding the asset sales. It's happening with a lot of companies. IVRCL no different, up close to 3% in the session. Jyoti, what do you do with, my question really is tactically, do you rebalance your portfolio, maybe leaving out some names which have had a distinct move upwards over the last couple of months, the entire consumption theme? I mean, you'll have the jubilance of the worlds of some of the FMCG names doing very well, high valuations, but probably the growth being there, and therefore trading at those new highs. There are certain pharma stocks which are doing the same thing. Tactically, do you reposition your portfolio, leaving out some of these names and buying out beaten down names? Or that's not a strategy they would deploy right now?
Okay, that's something which we have done very selectively. Like on the consumer staple names, we have actually turned underweight. So since the beginning of the year, we've been underweight those names because they're doing well. But I think, they've played out a lot. They've outperformed a lot and they are no longer cheap. So my view is that if and as and when we see rate cuts, these are stocks which relatively would lag the market. On the pharma names, we are still positive, and the reason we are positive the pharma names is, one is, we've seen rupee starting to depreciate again, so this is one exposure over there. The other thing is, we'll keep having these bouts where rate sensitives do well, and, another bout where they run up too fast, and then people will get worried whether RBI can cut rates fast enough. And that's, really our exposure. The pharma is an exposure to that bout where, the rate sensitives people start get wary of the rate sensitives.
Jyoti, with what we've seen, in the state elections, on the political front, do you think there is a fear of the Congress turning extremely populist this year? And that is indeed something that the market may not like because, the budget in itself was pretty much of a very play it safe budget.
Yeah, but if you see the budget, the good thing was there was not too many populist schemes. So it was not like, they went and spent a lot on these social sector schemes. If anything, the attempt was to cut down the subsidy element. Whether they actually succeed in meeting the budget targets or not is a different issue, because generally one would think that what you budget is something which is very harsh, but at some point during the year you'll probably overrun. Like our view is that the actual subsidy probably turns out to be higher than what was there in the budget. But beyond that, the budget did not do anything which was very, very populist, and that was probably on the margin a positive, I would think.
Okay, Jyoti, we'll leave it at that. Thanks so much for taking the time out and joining us, and look forward to have you more often.
Thanks a lot.
On the channel.